Hey everybody, how's it going? So today I'd like to discuss something that's been coming up in my comments regularly recently, which is, Lewis, I understand that these hedge funds that are over-shorting GameStop, you think that it's funny watching these billionaires lose money because they made a risky bet. What about, out of these money managers, what about the pension funds that invested in there? What about the retirement funds that invested in there that are also going to lose their money so that you can have your laugh? And I thought it would be a good idea to respond to this. So first, if you have teachers' pension funds or retirement funds or pensions going into a risky hedge fund that is making short sell bets, that's a much bigger problem than us pointing out that that's a problem. That in and of itself is the problem, not the people that are pointing that out. But B, what happened earlier today is, as you can see here in Bloomberg News, is that the Reddit Wall Street Bets crowd, they purchased a bunch of shares of a company that was being attacked by all of these short sellers, and they managed to get the price to go up. And as a result of the price going up to the pre-pandemic level, a teacher's pension fund was able to get out. I don't know if this is a retirement fund, pension fund, whatever you call it. Ontario Teachers Fund, 16.4% owner of Massarich, which is this mall owner, it looks like, sells it all. So it says the largest shareholder in mall owner Massarich sold its entire holding for nearly $500 million when the stock soared after being touted on Reddit. Ontario Teachers Pension Plan sold 24.56 million shares on Wednesday at an average price of $20.25 a share. And if you take a look at where this was over the past year, you can see that right after the pandemic hit, and obviously malls are not going to be doing well if they're all legally required to not have people do business there, you can see that it crashed. And it crashed from, the $23 to $6. And that would mean that, again, that section of the teacher's retirement fund would have lost about, 66, 70% of its value. And you can see that it was really over the course of the year not doing well. And then the Reddit Wall Street Bets crowd came in. And as you can see over the past month, it went from $10 all the way up to $22. So what you have to understand here is that the hedge funds that bet against companies, not in favor of companies, but against them, are making money off of failure. They're making money off of misery. They're making money off of destruction. And they're placing these bets. And when they place these bets in the manner that they place them, they're not helping pension funds or retirement funds or teachers' funds. They're destroying them. And then the money from that goes to them. So rather than that money going to Ontario teachers or your dad's retirement account or your mom's pension fund, it goes to Wall Street hedge fund billionaires. And the coolest thing here, in the same week that an app that was famous named Robinhood decides that they are going to halt trading for normal people so that multi-billion-dollar hedge funds like Melvin Capital can cover their shorts at a lower price, is the same time that the Wall Street Bets crowd is actually saving the teacher's pension fund from insolvency, which is a point that I think really deserves a bit more news coverage, because you have so many people in the financial press that want to vilify what is going on here and talk about how it's going to destroy the economy and how it's going to destroy people's savings and destroy the financial system. You know what destroying the financial system is? When you short something like this that the teacher's pension fund owns. This is destroying it. This over here, what happened right over here, this is Wall Street Bets coming to the rescue of a teacher's pension fund. And I think it's important to mention this because there are certain hot button issues in our society where anytime you mention them, and go figure, the sun goes down on me right after I set my ISO and white balance, there are certain hot button issues where when you just mention this one or two or three words, people immediately want to rush in with legislation that goes far and beyond what is necessary. So, for instance, you say terrorism, the Patriot Act comes up. You say, what about the children? And then you get stuff like SOPA and PIPA and all that other stuff, that all those other heavy-handed online regulations of the internet. And then you say things about, what about the teachers' pension funds? What about the teachers' pension funds? And that's the kind of language that's going to be used to vilify the people who were involved here. And you have to understand that the people involved in the Wall Street Bet side, they're on the side that's actually saving the teachers' pension funds. And, really kind of makes you wonder if I did a video on this a while back on the New Jersey debt, where how they got over $200 billion in unfunded liabilities for themselves. Imagine if New Jersey's pension funds for teachers bought in at $4 into GameStop. New Jersey could actually be a functional state for all we know at this point, but they wouldn't need 2.2 to 2.5% property tax on everyone. But is what it is. There's also some other interesting stuff that they're talking about doing here. I'm honestly happy, kind of excited to see what happens after they're done with what they're doing with GameStop. You have this here where someone's pointing out what's going on with silver, the biggest short squeeze in the world with silver, and they're talking about how JP Morgan has paid a fine for manipulation on silver, what it should be. This wouldn't be something that brings down just one little greedy hedge fund. Can you imagine a bunch of Reddit people bringing down JP Morgan? That's just insane to me. And also they've been posting today about BlackBerry. I talked about being a paper hands bitch in this in my most recent stream. They're showing you here how it goes under 15, Wall Street makes money. If it goes over $30, Wall Street loses money, and why? And yeah, the chances. So, and here's the funny thing. Here's the thing that I find particularly interesting. Wall Street people will make a lot of money if BlackBerry goes below 15 today, but they will lose a lot of money if it goes above 30. And that just so happens to align perfectly with apps like Robinhood saying that they're not going to allow you to buy more than a certain number of shares of BlackBerry, which is just I find that to be an awesome coincidence. So if you check this out over here, Robinhood says changes due to ongoing market volatility. BlackBerry, okay, they lowered it. It was 65 shares yesterday. Now they're saying you can only buy 25 shares at a time. That just so happens to line up with when Wall Street will make money if BlackBerry goes under $15. It's just like, what a fucking coincidence. And you can see right here that it's been holding the line all day, right in between that, 15, 14, 15, 14, 15, 14, 15, 14. It's just... When you see this stuff in front of your eyes, when a lot of people right now are really starting to get their first view of market manipulation in a way that they can understand. Like for a lot of people that, in 2007 and 2008, they may not have understood how derivatives work and everything else. But when you see brokerages shutting down trading right as hedge funds are allowed to lose a lot of money on the very stocks that they would lose money on, you can only sell, but you can't buy. At this point, you have to almost kind of appreciate the level of corruption, because what's happening is they're making it simple for the average everyman normal Joe to see that what's going on is absolutely fucked. And, I wouldn't be surprised if this shit ends the day at $14.99 just because Wall Street will make money if it's below 15. And funny, once this is done, I also wouldn't be surprised if this limitation just gets magically lifted, because all the people that were short BlackBerry, all the people that bet on it being below $15, once it's $14.99 and it closes at that, I wouldn't be surprised if this gets removed from the list. But maybe I'm just being overly cynical. Maybe that's inappropriate. I kind of think it is appropriate at this point. Over the last 13 to 15 years of fuckery of what we've been watching, some cynicism goes a long way. Anyway, let me know what you think in the comments down below. That's it for today, and as always, I hope you learned something. If you do some basic math on what that fund is worth when they sold it versus what it was worth when it was getting heavily shorted a few months ago, they saved the teachers fund about $300+ million, which is insane. And a true thumbs up to those at Wall Street Bets that managed to save that Ontario Teachers Pension Fund. Good on you.